Day 7 of backtesting every day for 2025. We're going to use the market ES, the S&P futures market. I'm going to be setting up a 15-minute strategy intraday. I'm going to be going long. So let's do a 20K candles, long only. And I want to use a candlestick pattern. I came across this on the Trendspider website. It's called a stalled pattern. And for those who aren't too familiar, the stalled pattern has 3 white candlesticks with consecutively higher closes. So it gives you like a long engulf, like a long candle for the first one. Second one could be could be a long white or very short upper shadow opening within the near previous white real body and closing higher than the previous candle. So it's a higher candle. And then the third candle gaps away or rides on the shoulder of that second candle. So it's like they're building on each other. So I'll show you on the chart. So I want to go long after this formation begins. And I'm going to do a 0.8 take profit. I'm going to do a stop loss of 0.5%. And let's see how this one runs. So I'm going to run it. All right. So we got 3.9% profit for this particular strategy. Let's look into what one setup looks like here. So we're taking this trade here on December 2nd. And if I zoom into the candles, you could kind of see. So prior to this, it's just been a little bit of sideways action. And what starts this candle pattern here, the stalled candle pattern, is we get that long, nice long body, that green one right here. And then we have the second body, which is we have a wick, but half of the middle body, but we're still closing higher. And that third candle, even though this one seems like a doji, a red doji, it's still closing higher than the second one. So it's building up already. It's just showing that the bulls are taking control in this particular moment. So you would enter on the following candle. So this is on a 15-minute bar, and you will enter here. The bot enters here, and then we'll ride the momentum up to the upside. I got long at 60.49, and what a 0.8% target profit looks like here. Let's see, all the way to 60.96. So that is about 46 points. Nice move right there. Look at that. So going back to the stats here, 46% win rate, very low entries, 39 entries over 8 months. So that equals to about 10 trades a month. Average length they're holding for 81 bars. So, you got to do the math there. 15-minute bars times 81. Max drawdown, very small, 3.3, minus 3.3%. Your average wins, 0.8. Average loss is 0.5, as we indicated down here. Let's look at the equity curve, Being that we are taking less trades, you're going to see these flat lines of these equity curves where there's simply no entries. You can see how price just moves up, and it doesn't have any entries when price is going sideways or on a downtrend, only on uptrends. And that is the system we want. If we zoom into the most recent times, market has been on a downtrend. And so we can kind of just see that, we taken a loss here, no entries, tried to get another entry here, take a loss, and we finally came back up. And just in the past, since December 31st, there's only been another entry on January 6th. Other than that, the market has been in a downtrend. And so that's something to consider when looking at this particular strategy. It's only catching when uptrend is forming, and that gives you an idea of is this strategy going to perform the way it's going to perform? Of course, with the low net performance, we are currently in a downtrend. Therefore, yes, it's not going to perform as well. If we switch it up to 30 minutes, let's see if we use 30-minute bars instead of 15-minute bars. Let's see how this one progresses. So we go up a little bit with 7.6%. Excuse my notes here, but 7.6%. Our win rate goes up to 51%, which is great. We took a whopping 6 more trades. So but it's overall over 16 months, so double the time. So that means we're taking less trades. We're taking about 5 trades a month. Very low for this type of strategy. You got to be very, very patient. Let's see what that entry looks like. See, the last trade was back here, December 12th. And then we can look at here, December 1st was an entry as well. And these, look at it, look how strong this particular setup was. The bulls were taking charge back here, and then you got the 3 candles, 1, 2, 3. And then when you did enter, it did pull back. So entry at 53 pulled back almost 20 points, 17 points here. And it kind of gives you an area of like, okay, I need to make my stop, larger than 17 points for this particular trade to work out. And then fortunately it did. It did work out very nicely. So 53, we're aiming for about 45 points here on this particular trade. So very cool strategy using the formation of stalled candles. Hope you guys found value in this. Let us know in the comments what you guys want to see as far as a strategy that I can try to input it with Trendspider, and hopefully I'll make a video about this. So thanks for watching. Tune in for the next day as we go over another strategy.